Welcome to Kemira's Q3 result studio, and welcome also Mikko, our head of Investor Relations, commenting briefly the past quarter.
Thank you, Tiina.
So we faced a drastic loss as our President and CEO Jari Rosendal unexpectedly passed away in July. How has the organization recovered from this great loss?
Well, overall, we were all very shocked and saddened by the unexpected news, as Jari was very much respected by all of us, and he will be greatly missed by Kemira and all of our employees. But nevertheless, as an organization, we need to go forward, and the search for a new CEO is currently ongoing. And until the new president and CEO starts, Petri Castrén will act as the interim president and CEO alongside his CFO duties.
Yes, and back to the results. So Kemira had another strong quarter. What were the drivers behind this solid performance? Industry and water even had a record profitability.
Yes, so I would say overall that the strong financial performance of the third quarter was again a demonstration that Kemira has a resilient business model, and we were pleased that the operative EBITDA improved year on year and also sequentially from the previous quarter. Revenue, on the other hand, that declined. This was due to lower sales volumes and sales prices, driven by the pulp and paper segment, where we have seen a weak operating environment. Looking at the profitability, so operative EBITDA, that was strong. This was following a sort of strong performance and improvement in the industry and water segment, and also steady margin performance in pulp and paper. And as you mentioned, so industry and water had a sort of record strong quarter in terms of profitability, but also we were sort of pleased that the pulp and paper margin performance was steady, which is an excellent achievement in a difficult market environment. Then if we look at the end markets, so pulp and paper market, there the volumes remained weak during the third quarter. However, there were some early signs that the market would have reached the bottom, but there is no meaningful recovery in sight yet at this point. In the other segment, industry and water, so market trends remained largely similar as in Q2. So municipal water treatment was steady, whereas then the industrial water treatment demand was more impacted by the economic slowdown. And then thirdly, the oil and gas business. So there we continued to see good market demand.
What are Kemira's strategic priorities currently?
Well, as we've talked and discussed before, so we have a strong desire to grow in water-related applications. So if I were to summarize as an organization, we have three strategic priorities currently. The first one really relates to the water treatment business. So the priority is to expand in water and significantly grow our water treatment business. This could be either by expanding into additional technologies or to new geographies, either organically or inorganically. Then secondly, we do want to build a leading renewable solutions portfolio to reach the 500 million euros in renewable or bio-based sales, as we have discussed before. And then thirdly, we're looking at creating a significant digital services business going forward.
Market environment is still rather challenging, but Kemira published a positive profit warning in October.
Yes, indeed. So we did publish a positive profit warning on October 10th. So we upgraded the outlook for operative EBITDA, whereas then the outlook for revenue is unchanged. So what we are seeing is that the end market development is largely according to expectations, whereas then the profitability development has been somewhat better than expected. And one major driver behind this has been successful variable cost management.
Yeah, and one important point is that the board has decided that the second installment of the dividend, 31 cents, will be paid on November the 2nd if you are registered shareholder on the record date on October 26th. So that's all from now. Thank you for the interview, Mikko.
Thank you, Tiina.
And see you all again in February.
Thank you.